Hi everyone, in this video we are going to complete the homework for chapter 1, and keep in mind that there is a test bank of random questions that you all will get. So the questions that you have won't necessarily be exactly the same as what I'm showing here, but they'll be very similar, just different numbers, etc. So if you get stuck on a homework problem, watching this will not give you the answer to a T, for your problem exactly, but it will provide you with the information you need to complete the homework. Like I said, having it be a very similar problem. Okay, let's go here. We've got 10 questions for chapter 1, and so we've got this information: cash, computer, personal financial statement stuff here, balance sheet items. And we want to calculate total assets. So what we need to do first is to identify what the assets and liabilities, etc. are. So cash is an asset, right? Something we own. Assets are things we own, and liabilities are things that we owe. And so we've got cash, computer. I'm going to copy these into an Excel that I have off screen here, because that will help me add them together easily. Bear with me for one moment. Okay, so we've got cash, computer, automobile, house, and those things will all be assets, things we own. And then we've got credit card, student loan, and mortgage. Those will be all things that we owe, or in other words, liabilities. So we're going to go through and just add together those items. So if we add up the cash, the computer, the automobile, and the house, our total is $97,780. And if we add up the credit card, student loan, and mortgage, our total is $40,000. And then based on the knowledge that we have about the accounting equation, so we'll say assets equal liabilities plus net worth. So we're basically solving for just one, 97,780 equals 40,000 plus net worth, or X if you're in the algebraic setting. And so to answer that question, we just take 97,780 minus 40,000, which gives us 57,780. In other words, we add this liabilities plus net worth, it should give us the same thing as total assets. Then we can click our check button here, and we see that we have green marks on each, 100%. So we'll go to the next problem. Okay, question number 2. The following information was taken from the personal records of Juliet Lamb on October 31st, 2024. So we have opening balances, we have transactions, so on and so forth. So all that we have to do on this one, we don't have to go into each of the T accounts. Just cash is what they're wanting to show here. We will see a more full breakdown of T accounts, with all the accounts in future problems and in the workbook exercises. But for this one, it's just kind of a snippet, a portion. Okay, so let's complete the cash T accounts. So our opening balance here, $3,700. And that for cash, it will be on the left side, or the increase side. So that's our beginning balance, or opening balance. And then we earned a salary of $4,900, so that's going to increase our cash balance. We purchased an automobile, but we purchased it on account, so that's not going to affect cash yet. That's buying it. We bought the automobile and we incurred a liability of $8,810, which will be paid with cash in the future. But this is just saying we incurred this liability to get this automobile. If it said we made a payment on the debt related to the automobile purchase, that's where cash would be affected in the future. Okay, we paid $790 for, we want to match up the transactions too. So that's transaction 1, transaction 2, and there was a $990 cash for travel expenses, so decrease in cash. Purchase an automobile on account, so nothing there. Paid $790 for transaction 4 for cell phone expense, and paid $500 for gas. And then we could say we want to calculate our ending balance of cash, we want to go through, take our opening balance plus the increases, so 3,700 plus 4,900, and then minus all of the decreases. And this total minus the total over here, we end up with a $6,320 ending balance in our cash account. So all green arrows there, green check so far, so that's good. And then we want to complete the personal income statement to determine the surplus or deficit. So here we want revenues and expenses. So we earned $4,900, that's our revenues. And then our cell phone expense was $790. Our gas expense was $500. Just those two things. So $790 plus what was $990? Travel. Did we get that? Did I miss? Oh, sorry. Travel. $990. There we go. So that gives us a total of $2,280. Just adding all of these together. And then if we take 4,900 minus the 2,280, it leaves us with 2,620 of surplus. And finally, it wants us to calculate our net worth, ending balance net worth. So we need to take our 130,700. Whoops. 130,700 beginning balance plus the surplus of 2,620. And I get, let's see, 133,320. So what is that? 133,320. Yep. Okay. Perfect. Did the math right. 1 out of 1, 100%. Great. Let's move on to question 3. Okay. As of January 1st or 31st, 2023, total assets 3,690, total liabilities. And as of January 31st, our assets increased, total liabilities decreased. So fill out the following table of account balances and how has Kelly's net worth changed since 2023. Okay, so let's just put this information together here. So we have assets, liabilities. So it tells us we have 36,090 assets, and we have 23,140 liabilities. So then net worth as the difference between those two, basically, right? Assets minus liabilities is 12,950 at January 31st, 2023. And then we say at January 31st, 2024, so a year later, our assets are 38,920. Our liabilities are 21,230. And again, we've got to calculate our net worth, so assets minus liabilities. And now that 38,920 minus the 21,230 is 17,690. And so I think, okay, and so all we need to do here is just put in the differences. So really in this problem, we're just taking the difference between the net worth, and this is pretty basic, but we're saying net worth has increased. This number is bigger than this number by 4740. Sweet. Okay, we got 0.5 out of 0.5, 100% on this one. Let's go to the next problem. Okay. Following information pertains to Timothy Dalton's personal financials. Okay, so here we've got a whole more, like I was talking about, a more complete listing of T accounts, not just cash, right? And so similar to workbook exercises we've done, in this problem we need to put in opening balances and record our transactions. Okay, so I'm going to do one quick thing here. I'm going to take a snip so that I can have this on my second screen. And I don't have to scroll back and forth as much. So, okay. So our beginning balance of cash, 14,400. Contents of home is 2,300. Automobile, 26,700. House, 158,200. Okay, and that's all of the assets. And then on the liability side, we've got, wait, am I missing the house? No, I got it. Okay. On the liability side, unpaid accounts of 7,000, and then bank loan of 40,700. And then our net worth here is, okay, so we need to calculate our net worth here. It doesn't tell us directly. So let's do that now. So we have 14,400 for cash. So I'm going to figure out our total assets, figure out our total liabilities, and then take the difference between the two, basically. So total assets is 201,600 is what I have for opening, and then total liabilities opening. Excuse me. Let's see. So okay, is 47,700. So we take the difference between those two, and I got 153,900. Let's hit our check button just to see if we did our math right. Perfect. Sometimes it's good to do the check as you go along, so you're not, just to make sure you're on the right track. So again, we had to calculate our net worth. It didn't, in the homework problems and things like that, a lot of times it tells you the balance. We had to add up all the assets, add up all the liabilities here, and then take the difference between those. Assets equal liabilities plus equity again, or in other words, or net worth. In other words, net worth equals assets minus liabilities. Okay, so we've got that done. Now we want to go through and record our transactions. So our transaction number 1, we paid maintenance expenses for the month of February, $200 cash. So we're paying with cash, so reducing cash. And we've got maintenance expenses. So let's find maintenance. Okay, and we're going to increase our maintenance expense, $200, increase on that side. The left side, decrease our asset on the right side. Purchased a new computer worth $3,000 with cash. So this is not an expense, but rather, a purchase of an asset with cash. So one asset goes down, one goes up. So I'm gonna put that in contents of home, I think is the right place there. Yeah, contents of home. Paid credit card liability of $7,000 in full. So we're paying that liability off with cash in transaction 3. So we're going to reduce our cash and reduce our liability. Cash reduction on the right, liability reduction on the left. Paid our utilities bill for $800. And that was transaction 4. Let's find utilities. 800. So an increase or recording that utilities expense and then reducing our asset accordingly. Purchased $2,100 of groceries and goods, etc. So reducing cash, and then we want to find, groceries expense or food. Yeah, that must be food. $2,100. And finally, we deposited $2,900 of salary. So transaction 6. So I'm just going to put this worksheet down here at the income statement side. So on the increases for revenues on the right, increases for debt expenses on the left. So just kind of start to familiarize yourself with the rights and lefts. That'll be really important throughout accounting in general and just through the course. And we've got that side of it. And then we want to record that we received the cash there on the other side. Okay, so now we've recorded all of our transactions, and we will want to calculate ending balances for our T accounts. So we've got 14,400 beginning plus 2,900 minus 200 minus 3,000 minus 7,000 minus 800 minus 2,100. So I have an ending balance that I show of 4,200. This ending balance will be 0 because we had a beginning balance of 7,000 and we decreased it by 7,000 to bring it to 0. No activity on the bank loan, so we just carry that down. Contents of home went up by 3,000, so that'll be 5,300. 2,300 plus 3,000. No activity on the automobile. No activity on the home, but we want to carry the balances down just to be complete. Our net worth will be updated in our total down here, but we just carry that down for now. Just one transaction for revenues. And we have our maintenance expense. We have just one utilities expense and one expense recorded in food expense account. So revenue is easy because there's just one transaction there of $2,900. Expenses, we have to add these three together. So we have 2,100 plus 200 plus 800, which leaves us with 3,100 in total expense. So we are in a deficit situation here. So we've got minus 200, and I think they want us to do negatives, not parentheses. Yeah, negative sign for deficit. So that's that. Let's hit our check button so far so we can see if we're on the right track. Yeah, okay, looks good, looks good, looks good. I think the only thing we have left here now is to add up our ending balance of assets, liabilities, and net worth to make sure that we balance. And so we've got, cash, ending balance 4,200. Right here, contents of home 5,300. Automobile 26,700. And house is 158,200. So our total assets at the end of the month are, I got 194,400. Our total liabilities at the end of the month, 0 there, so that's easy. And then, so really just that 140,700. So we don't really do too much math there, pretty simple. And then we want to take our 153,900 beginning balance, opening balance, and net worth, subtract the deficit because we had a deficit. If it was a surplus, we'd add it. So 153,900 minus 200 leaves us with 153,700. And if we want to check ourselves, we can add these two, net liability and net worth, to make sure it equals to total assets as per the accounting equation. And yep, it looks like it does. So hit our final check, and I think that is, yep, everything there, 0.5 out of 0.5. It seems like a lot to do in this problem for half a point, by the way, but 100% anyway. So that's great. Let's move on. Okie dokie. So now we are on problem number 5. And a very similar problem. So we've got opening balances. This one gives us the net worth, so we don't have to calculate that. And it's got all the transactions. So I'm going to snip this again to be able to see this easier on my second screen. Less scrolling up and down. And let's go through and do it all again. Okay, so we've got $8,700 beginning cash, 2,100 contents of home, 26,300 automobile, 214,400 house, and then we've got unpaid accounts beginning balance of 7,600 and mortgage of 143,300. And finally, our net worth is 100,600. And again, these are just all, I'm just inputting these directly from here. Okay, so now we've got 7 transactions to record. First one, purchase new furniture worth $1,700 per home using a credit card. So in this instance, we're not going to hit cash, but we're going to hit unpaid accounts to increase that liability that we owe on the credit card. And we're going to put the furniture in contents of home. So increase the asset, increase the liability. Paid credit card bill with $4,900 cash. So we're going to reduce our cash here, transaction 2. We're going to reduce our unpaid accounts liability. The amount we owe will be reduced by $4,900. Paid utility bills of $800 using a credit card. So again, transaction 3, increase our credit card balance. And that's going to be an expense, utilities expense. We'll come down here, $800. Purchased gas for $3,400 in transaction 4. So while we're down here, I'm going to record the gas expense but I'm going to go back up also. So this was using cash in transaction 4 for $3,400. Transaction 5, we made a principal payment of $1,100 on the mortgage. So transaction 5, we've got the cash reduction there, and we've got the liability reduction here, decrease on the left for that. Paid March's rent of $600 cash. So reduce $600 cash and rent expense here. Find that, and that was number 6. And finally, deposited $4,700 of salaries earned during the month. And that's our last cash transaction of increasing our recording for salaries. Okay, and now let's go through and do all of our adding and summarizing our T accounts. So 8,700 plus 4,700 minus 4,900 minus 3,400 minus 1,100 minus 600. So do all that math. I get 3,400 ending balance. Again, opening plus anything on this side minus anything on this side, and then kind of opposite for liabilities, right? Opening here plus anything on the right side minus everything on the left side. Okay, contents of home, 2,100 plus 1,700. I think I can do that math in my head. 3,800. Automobile, no transactions, so that just carries down. Same thing with the house. For net worth, we just carry that down here. We'll update that, down here when we get our surplus or deficit. 143, 300 minus 1,100 gives us 142 to 200. I guess that makes sense. And then let's see. Okay, so we had 7,600 plus 1,700 plus 800 minus 4,900. I get an ending unpaid accounts balance of 5,200. Again, in opening balance plus everything on this side minus those. Let's go down to our revenues and expenses, our income statement items. So just one transaction for, and I just caught myself. I put that on the wrong side. So 4,700 ending. And then same thing with all of the expense accounts. They all just go down. There's just one. Pretty easy here, 4,700 revenue. And then if we just add these three expenses together, 3,400 plus 800 plus 600 gets us 4,800. And we have $100 of deficit, it looks like, is what I calculate here. Let's hit our check button now to see if we're on the right track. Everything's looking good. Okay. So final step in this problem is to add up all our assets. So 3,400 plus 3,800 plus 26,300 plus 214,400. We add all those together, we get 247,900. Now let's take a look at our liabilities. We've got 5,200 ending balance in unpaid accounts and 142,200 on the mortgage. So I end up with 147 for my math here. 147,400. And finally, the net worth, we start 100,600 minus $100 of deficit would bring us to 100,500. And if we want to check ourselves, we're going to add our liabilities and net worth together. 247,900. Yep, so that equals total assets. So we should be good, but let's hit our check button just to make sure. And yep, 1 out of 1. And that's awesome. Okay. Perfect. Let's go on to the next problem. Okay, continuing on here into question number 6. So we've been provided here in this problem with financial information. We've got both balance sheet type information, assets, here, cash house, liabilities, bank loan. Then we've got salary, so revenue, so income statement items here, salary, revenue, entertainment expense, food expense, etc. And what we need to do is to prepare the income statement for the 3 months. So, okay, so we just need to go through and figure out his totals. I'm going to copy these into an Excel to make this much easier from a calculation standpoint. Okay, so we can basically, for the income statement, we can ignore any of the assets and liabilities. And we can just focus on the income statement items, so just revenues and expenses. I'm going to just do this real quick here in my Excel. And so what we want to do is we want to take our revenues minus our expenses, excuse me, and then kind of add that both ways here. We'll see. So our revenues for these 3 months here is the 2,900. It's 2,900 for the first 2 months, and then 3,400. Adding those all up across gives us 9,200. And then for our entertainment expenses, 330. Food expense, 1,220. Insurance expense, 350. Miscellaneous expense of 380. And utilities expense of 450. We add those all together, we get I get 2,730. So, and then if we take 2,900 minus the 2,730, I get 170. Let me do this real quick. Okay, this is a little bit of a tedious problem, but hopefully it helps you understand what goes on the income statement and versus the balance sheet. So entertainment expense here, 550. Food expense, 1,260. $300 for insurance expense, 370 for miscellaneous, utilities, 390. Adding all those up gives us 2,870, and then that would give us with a $30 surplus, 2,900 minus 2,870. And then finally we've got 510, 1,160, 380. 270, and I'm just pulling these down from above. 610. That summarizes to 2,930 total expenses, and that gives us 470. So with this pay increase, that's now it's increased. Your surplus is increasing as well as your expenses stay relatively the same. That's good. Okay, and then we're just summing up across wise. So just going across here for the 3 months. 1030, 1020, 1,450 is what I got there, and then adding all those up gives us what? Let's count my, come on. Okay, adding all these up, I get 8530, and then a total 3 month surplus, adding these three up, of 670. So sweet. Okay, got all those right. 1 out of 1. Good to go. And on to the next problem. Okay, question number 7. So this guy is working at a law firm, salary increase, yada, yada, yada. Very similar type of problem. A little less tedium on this problem where we're just looking at opening net worth. But there's a few things that we kind of need to know to be able to solve this problem here. So with that said, I'm going to put it into my Excel so it's easier again to add. And so what we want to know is what is the net worth at the end of each month. And so to figure that out, we want to take, it doesn't tell us in this problem, but it does tell us our assets and our liabilities. So if we have those two things, that's 2/3. Those are two of the items, and the final unknown is what we need. So as far as total assets go, we've got cash and automobile. And then for liabilities, we've got our credit card bills, our automobile loan. Yep, just those two. So if we take our assets minus our liabilities to get our net worth, then let's see. Oh, sorry. And assume his opening net worth is $450. Oh, maybe there is more tedium in this. Okay, so his opening net worth is $450. Because we do have to calculate surplus or deficit. And okay, so surplus, we have to take his salary minus all of his expenses. So for the first month of November, so his salary minus expenses gets us $7,160, so $8,600 minus these three. And then I've got $6,200. We've got $6,800. And so if we want to take, so he's got his opening net worth of $450 plus the $760 gets us $7,610, so $7,610. And then that number carries up to be the beginning balance of the next month. And so, right, so this carries up here to be the beginning. Then we added $6,200 to that. So that's going to give us $13,810 for my calculations. Again, carry that over to the beginning balance. And finally, I got $20,610 for the ending. Sweet. Okay. 1 out of 1. That's great. Okay. Question number 8. Use the opening balances provided here. So we've got a number of different types of transactions that we need to account for. And we want to enter the updated amounts after the account. So we received a student loan of $5,400. So that's going to increase our cash. So cash is $5,400 to start. So that's kind of interesting. I guess we're doubling that. So if we get another $5,400 in cash, then we had $10,800. If we started with a $5,200 student loan plus $5,400, so we'd have a $10,600 student loan. So these are the only two accounts that will change based on this transaction. If we're saying we received cash of $5,400, cash goes up, but our liability goes up as well because it's a loan, right? We owe that money back. We got the money, but we also owe it. And then for all the rest of the information here, I guess we're just carrying this all down. And our total assets will increase by the $5,400. So $125,000. And again, nothing about, these other accounts. We're just carrying these all down. Okay, and then our total liabilities, again, those will also increase by $5,400. So before it was $63,700. Now it's $69,100 after we add the $5,400. And our net worth did not change. Because we had no revenues or expenses. With this, we'll go up. So now it balances. Let me hit the check. I just want to make sure I'm doing this problem the way they want it. Yep. So that's what we got to do there. Okay. So it's just kind of just sort of threw me off because it was the same amount. So anyway, $5,400. 2 of those. Okay, so question number 2, we sold investments for the same amount that they were purchased, $3,800 in cash. So we sold these, so we're going to get cash, and we're going to reduce our investment asset. So cash asset goes up, investment asset goes down. So 4,800 plus 3,800. So we'll now have 8,600 in cash, but we will have 8,000 minus 3,800. We'll have 4,200 now in investments, which is basically just moving from one asset to the other. And then again, we just carry everything down. And something to keep in mind here, the total this won't change because we're just moving categories within assets. So then we just go through and do some of the TDM. Sometimes there's TDM in accounting. So we're just gonna carry all these down from above. Nothing changed. Again, totals all stayed the same because it was just a movement within the asset categories. It didn't change anything otherwise. Okay. Question number 3, we paid $1,500 to reduce outstanding mortgage payable, the principal portion. So our cash will decrease by $1,500. So that leaves us with $4,400. All the rest of the assets are unchanged. So I'm just carrying those all down. And then our total assets here will also decrease by $1,500. So 107,400. And then unpaid accounts won't change. The only thing that will change on this side is that the bank loan goes to, sorry, no, that's not the bank loan. Thought it was the bank loan. It's the mortgage that is going to be reduced. So 54,100. Oops, 54,100 minus 1,500 gives us 52,600. And again, our total liabilities will decrease. 69,800. Oh, 69,800 before minus 1,500 brings us to 68,300. Net worth is unchanged because we didn't have any revenues or expenses. We're just assets went down and liabilities went down accordingly. And our total hopefully ties, it should equal our assets now. 107,400, yep. And that's a good sign that we are in balance and everything's good. Geez, there's a lot of inputs on this one. Okay, getting close. Okay, so we bought, okay, so this one has three different transactions here. So we've got a few more calculations to do. That's okay. We bought a motorcycle for $9,000, paid a $1,300 deposit with cash, and borrowed $7,700 from the bank. So we had a beginning balance in cash of $5,600. We added $7,700 from bank, paid a $1,300 deposit with cash. That's a weird way to say that, honestly. Paid a deposit with cash. I made a deposit, I guess. I'm going to assume that is an increase. They're trying to say that we earned $1,300 and we borrowed this amount of money, and then we bought a motorcycle for $9,000. This is a poorly worded problem here, but we'll try to solve it. Okay, so 7,700 plus 1,300 is 9,000. So if 9,000 went in and then 9,000 went out for a motorcycle, it's really unchanged from 5,600. We have 9,000 for the motorcycle. So our asset went up. Cash really went up and then went back down, but overall it's the same balance there. So let's take 117,800 plus 9,000. So in total, we added 9,000 to our assets via the motorcycle, really. And then our unpaid accounts didn't change. Oh, let's see. Okay, our bank loan went up from 1,300. We added 7,700 to the bank loan. Gives us, so 9,000 is our outstanding bank loan now. 1,300 plus the 7,700. Our automobile loan didn't change. Our student loan didn't change. Our mortgage didn't change. So total liabilities is increased 7,700. So 62,600 plus 7,700. So 70,300 now. And then I suppose what they're saying is we earned $1,300 in revenue, and we're going to add that to our net worth number, which would lead us to an ending net worth of 56,500. And adding these together should be the same as the total assets. So let's check ourselves. No, it does not like that. Paid $1,300. Oh, I think I know. Oh, okay, I see what they're saying. We paid part of the motorcycle in cash. Sorry, that was just strangely worded. So cash. So we paid out of the 5,600 minus 1,300. So really, we just need to reduce this by another 1,300. And then our total, and then net worth will stay the same. Our total assets then will decrease by 1,300. 26,800 minus 1,300. So I get 125,500. I think that I'm just going to do the check there real quick. Yep. Okay. So sorry for my confusion there. Yeah, the way they worded this was a little bit strange. A deposit is usually making a deposit into a cash account, but what they're saying here is you made a cash payment for, and you borrowed this much and you paid this much to buy this $9,000 motorcycle. So part of it came out of cash, and then part of it came from an increase in a liability, which will be paid in the future. So 100% on that one. And let's move to the next problem. Okay, question number 9. We want to indicate whether the account balances will increase or decrease, and by how much based on each transaction. The first transaction has been completed for you. Always ensure that the accounting equation is balanced. Yada, yada, yada. Okie dokie. So in this problem here, we are going to, step 1, say we purchased $110 worth of fuel on credit. So that's an expense, right? Not an asset. And it was an increase in a liability because it's on credit, and fuel is something that will be used up currently. It's not something we own going forward, so it's not an asset, but it's an expense, decreasing net worth. Okay, made a bank loan payment. So we made a payment, so we reduced cash and we reduced a liability accordingly. Purchased a couch for $1,100 cash. Okay, so our transaction affects 2 categories. The positive amount first. So first we got a $1,100 couch, but we paid for it with $1,100 in cash. So asset up, asset down. Same thing here, $630 of prepaid insurance, which is an asset because it's going to go into the future as we use it up. And then if we use up 1 month of that insurance, it's 3 months. So we need to divide the 630 by 3. That gives us 210. So our prepaid insurance asset reduces by 210, and we recognize $210 of expense for the insurance. Paid interest of $51 in cash. Excuse me. So cash goes down, and an expense is recorded for the interest, and that affects net worth by decreasing it. And then we received an internet bill. So we're saying we didn't pay it yet. We just received the bill. So that's an increase in the liability that we owe, but we're going to record that expense in the same period even though we haven't paid cash for it yet. So a bit of accrual accounting is kind of the concept there, that you are, even though you didn't pay cash for it, you are recording the expense this month because it's for this month essentially. Okay, question number 10. So this guy wrote down some accounting information. Some of it was lost. And so we need to do some detective work here, I guess, to figure out the totals. Okie dokie. So how much is Thomas's furniture worth? Okay, so we know his net worth. So the first step here is to identify what's an asset, what's a liability, etc. And so this bicycle is an asset, his automobile is an asset, his cash is an asset, furniture is an asset, net worth is net worth, right? Bank loan is a liability, a television is an asset. Oh, and it does tell us total assets right there too. So that's helpful. Unpaid bills is a liability. So some of this is just a little, it's kind of jumbled up. But total assets. So total liabilities is, I guess it doesn't. Okay, so how much is Thomas's furniture worth? Okay, well, so if we know the total and we know all of the assets other than furniture, we just need that one amount. So if we add up everything except the furniture, all the assets anyway, we get 5,740. So bicycle, automobile, cash, etc. And then we know the total is 9,740. So what is that? $4,000 difference, I think. So then by default, the furniture must be $4,000 to get us to add up to the total assets, basically. And then it asks us, what is the balance of his bank loan? And so again, we got to so if we know that the total assets is 9,740, we know that the net worth is 3,680. So basically the total assets minus whatever total liabilities is equal to 3,680. So the difference between 3,680 and 9,740 total, the net worth minus the assets is 6,060. So total liabilities must be 6,060. Unpaid bills is 2,670, which it tells us. So we just need that final component of the bank loan, and I get 3,390 for that total then. So that was kind of a little bit of a head scratcher problem. You really just gotta, that was more of like a little puzzle, just trying to figure out totals and so again, to figure this one out, it tells us total assets, but it doesn't tell us one of the components there. So you had to go through and figure out the missing piece for the assets. And then it tells them with that information, we have total assets and total net worth. So we can use those two figures to get total liabilities because it's just the difference between them. And then we know a portion of the liabilities and we would know the total now. And so then you just have to do the math to figure out the other piece, which is the bank loan. So a little tricky, but that's the step there. So, all right. Well, that gets us to the last problem in chapter 1 homework. And hopefully this was helpful. Appreciate all you guys. And please let me know if you have any questions. Thanks.